Welcome to the Gamma Brief. It is Tuesday, August 11th, 6:45 a.m. Eastern. The Gamma Brief is an experiment built using a layered generative AI pipeline to capture market data, economic events, and structural mechanics. All the data is then synthesized into actionable briefings every morning. This brief is built on a single dataset, the SPX 0DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX Flip point are calculated from that chain only. Standard disclaimer: Gamma Brief is market intelligence, not financial advice. Make sure to smash that like button and check to see if you're subbed. Let me know in the comments if you'd like to see anything new or anything changed. Alright, let's get started. ES futures are trading at 7,777. The prior call nailed the range. We forecasted a constrained chop and dealers defended the 7,775 call wall exactly as projected. But today, the index is testing its limits. If the overnight gap holds, the structural anchors below invert into support. We remain entrenched in a positive gamma regime with VIX resting at 15.52. That dealer gamma exposure sits at positive $700 million. Dealers are net long options, meaning they are mechanically mandated to sell into rallies and buy into dips, dampening volatility and reinforcing a mixed choppy environment. The GEX Flip level is positioned at 7,800, giving us roughly 47 points of breathing room. While the regime holds, the prolonged compression indicates building kinetic energy beneath the surface. The overnight session has already shifted the board. ES futures at 7,777 have already breached the 7,775 call wall, meaning dealer gamma resistance has failed. We have also already cleared R1 at 7,770, putting the first active resistance at R2 at 7,787. The expected move band anchored to the SPX prior close of 7,753 is plus or minus 76 points, giving us an upper bound of 7,829 and a lower bound of 7,677. Geometrically, ES sits 77 above put wall, -2 from call wall, gap fade reprices floor to 53. Overnight flow was dictated by geopolitical friction, with dimmed prospects of a US-Iran diplomatic resolution driving crude oil sharply higher. Across assets, ES traded completely flat at 0%. VIX ticked up 0.39% and the 10-year yield climbed 7 basis points. This dynamic fueled a distinct sector rotation, with energy surging 3.3% and healthcare up 1.9%, while technology lagged by 0.7% and utilities dropped 0.9%. No high-impact events are scheduled between now and the open, meaning pre-market regime read carries into the session without interference. The NFIB Business Optimism Index dropped at 6 a.m. Eastern, but the broader catalyst landscape is quiet today. With no major data drops, the primary threat is a mechanical failure if price breaks or sustains above 7,800, forcing dealers to chase. The environment is consistent with patient-based fades of extreme moves inside the expected move band. However, pushing aggressive long delta positions into the upper boundaries of this structure is feeding the pin. Every rally runs into dealers selling into it. Range-bound income structures and defined risk directional plays are the appropriate alternative in this dampening regime. A sustained hold above the 7,775 call wall invalidates the mean reversion read and opens the door to the 7,800 flip. The structural resistance at 7,775 has been pierced pre-market, shifting the burden of proof to the bulls to hold the gap. Failure to sustain this altitude will trigger mechanical selling back toward the equilibrium. 7 days, one regime. The longer it holds, the harder it breaks. Level set, bias defined. Good luck out there. Standard disclaimer remains. Gamma Brief and GEX Log are market intelligence, not financial advice. Options are high risk, manage your size, and trade your own plan.